Credit cards. Look, credit cards can be the greatest invention in the world or the worst depending on how you use them. If you first understand that they are not free money, you are already ahead of the game. If you use them to your advantage, you can actually have the credit card companies pay you for using their money. And who doesn't like to get paid to spend money? However, if you do not understand how they work or are irresponsible with them, then they will be a nightmare for you and can severely limit your ability to generate wealth. Let me start by explaining how you can have them work for you. There are plenty of cards out there that give you a rebate on the amount you purchase or points to be used for something you want. For example, the Capital One Quicksilver card currently pays 1.5% back on all qualified purchases. Therefore, everything you purchase using this card only costs you 98.5% of the purchase price. A quick example is that you purchase some clothes at the store for $100. You would actually only pay $98.50 as Capital One would give you a rebate of $1.50 to be applied as a credit, or they could send you a check for that amount. However, you must pay off the balance at the end of each grace period to gain any financial benefit from using it. In addition, if you use them for everything, it allows you to keep track of your expenses easily, particularly if you're using Money Management 101 tools that were provided with this course. Also, try to use cards that do not charge an annual fee unless you want a card that will return benefits greater than the annual fee itself. Now that you understand how beneficial these financial pieces of plastic can be, let's understand how detrimental they can be if used incorrectly. If you're a person that thinks that these are free money or uses them as a way to buy things that you cannot afford, then it will cost you a lot more than what the items you bought cost. For example, you have an Amex bill for $3,300. The interest rate you have is 16.74%. Your statement minimum payment is $35. Amex says if you make the minimum payment to pay off this balance, it will take 12 years to pay off that $3,300 balance. And the total you will pay over that 12 years is $6,572, of which $3,272 is interest. This is a crazy amount of interest and is a poor way to run your financial life. With that being said, let's get an understanding of how credit card interest is calculated. You're just going to go ahead and simply divide your annual percentage rate, the APR, by 365 and then multiply your balance by that rate each day. For example, your APR is 20%. Thus, your daily interest rate is 0.05% per day. Each day interest calculated is added to your outstanding balance. Now, interest won't apply if you do not carry a balance from month to month, so that's the best way to do this. Therefore, if you begin a billing period with a revolving balance, interest will accrue on a daily basis. Paying off your original balance won't bring your total account balance to zero, as you will be responsible for the finance charges that accrued from the time your bill was made available to when your payment arrived. Thus, carefully reviewing your monthly credit card statements will enable you to spot unanticipated charges as well as raise questions about potential mistakes. So here are a couple tips for avoiding interest. Pay off what you spend using a credit card every month, or use a credit card with a 0% interest rate. Now, let's say you're interested in getting a credit card, but you got no credit history. It might be a little challenging. So in order to get one, you're going to need to do the following. You must show that you have sufficient income to repay your credit card balance and that that income is derived from you unless you have a reliable access to other sources. You should also get pre-qualified. A few major credit card issuers have an online pre-qualification tool that allows you to see if there's a credit card available for your credit profile. Here are a few credit card issuers that offer online pre-qualifications: American Express, Bank of America, Capital One, Citibank, and Navy Federal Credit Union. Now, if you're a student, you'll probably qualify for a student card with a low limit. And if not, then you could also apply for a store credit card, as retail store credit card issuers have a reputation for approving credit card applications for people with no credit. Or you can get a secured credit card, because secured credit cards are the go-to cards for people who can't get approved for traditional credit cards, as they act similar to prepaid debit cards. Or you can get a cosigner, or you can become an authorized user. Now, generally, in order to get a credit card, you will need to provide the following: your name, birthday, social security number, annual income, and bank account information. Lastly, a nice benefit of a credit card is that if someone steals it, then you're not liable for any charges except for maybe $50. However, Most credit card companies assume all the liability for any fraudulent charges. This is different when using a debit card, which we'll discuss next.